Hi and welcome to Mike's Investing. I have a update for you today. As you've probably seen, the market went down quite a bit. It was a pretty steep sell-off, and you might be wondering where the market is going and what sort of trend information is out there. And I'll try to help you with that. Just real quick disclaimer. So this is for educational purposes only. Please don't base financial decisions based on my videos or content. All right, so let's begin. So I've talked before about quantitative easing and quantitative tightening. And for quite some time, quantitative easing was the name of the game. The Federal Reserve would add liquidity into the market, and that would cause investment stocks, bonds, what have you, to rise. In fact, everything. Any sort of investment was going up. Crypto, you pretty much name it. Now the problem that comes in is whenever that you have inflation and the Federal Reserve needs to get it under control, they start doing quantitative tightening, which is essentially they're going to raise interest rates. That's part of it, but the real part actually hasn't begun yet, and it's really going to start hitting in September, which is to sop up liquidity in the market and start to remove it, which can have some pretty adverse effects. It's only been tried once before, and when that did happen, the market started to quickly turn down, and then Federal Reserve quickly switched gears. All right, so what does this mean, and how does this have to do with the sell-off today? Well, I mentioned before that the market has been going down because we're starting to tighten instead of easing. And because of that, you really shouldn't try fighting the Fed. I mean, when the Fed was adding liquidity, the market was always going to go up. Yeah, it might go down, and then the Federal Reserve adds more liquidity, and it bounces back really quickly. Think of the recovery from COVID. Now, with that being the case, now the Federal Reserve is no longer there to buy all of these assets. In fact, they're starting to sell assets, especially in September. It's already begun. So all those mortgage-backed securities, they're starting to unload their balance sheet. So I see the market continuing to go down. I saw this recent rally as nothing more than just a fake rally for what that it was. I don't have all my investments fully in the market. Actually, to be honest, they're only about halfway in. I see it continuing to go down. So today, if you look at the S&P, it's at 39.32, lost 177 points. From the research that I've done, honestly, it could test the lows in June or go below that. We might see 33, 3400. I've heard some folks say that it could go down anywhere from 15 to 20%. So who knows if that's how much it will go down. No one really knows a true bottom, or can they state what that bottom is. But the market's probably going to continue to go down. And if you look at gold and silver, they also went down today. The reason being is the dollar all of a sudden got much stronger because of the inflation numbers that came out that were hotter than expected. So high inflation, which means that the Federal Reserve needs to tighten more, which is probably a 0.75 increase on the Fed rate. And what that means is that makes gold weaker and silver weaker. And as the Federal Reserve continues to tighten, that's bad for earnings for companies, which makes the market sell off. Now, today happened because everybody thought that the Fed was, I wouldn't say kidding around, but not super serious about really trying to tame inflation. And they were starting to figure in the September rate hike being half a basis point instead of 3/4. And now with this inflation data that came out this morning, they quickly changed their tune and are believing that it probably is going to be a 3/4 basis point increase, which once again hurts businesses. So short term, I still see this going down. I think it's going to, it's definitely going to lower the prices to where you're going to get some decent deals. And you have to remember that everything hasn't fully unraveled yet. You have the real estate market, which is still going down, and it's starting to soften, but the deals are now starting. We haven't seen all the foreclosures yet, but we'll start to see those hit. And that's definitely going to lower the price of the real estate market. The other thing, too, is there's a lot of things causing inflation. You still have China, which is still having sporadic lockdowns, which creates a scarcity of goods, which increases the price of them. So you still have a demand here and you have limited supply. On top of that, you also have the crisis in Europe and how that there is limited fuel. So as many of you know, to grow crops, you do need you need those resources. And if they're not available, or if they're really expensive, you can't make fertilizer. So you definitely need that. You also have India, which is cutting back on the rice exports. That happened this week, which that's a big problem since they export close to half the rice that's used in the world. You have Ukraine, which is a major exporter of wheat. So now you have that's been going on. So food prices are going to continue to rise. You're going to have prices out of China that are going to continue to rise, especially with all the problems that are going on in China. And there's a lot of problems there, and I talked about that in a previous video. So all this is adding up to the market going down for a little bit. This could be that 15 to 20% healthy correction that we've needed for a little while now. So you need a reset. The companies that are bad business models need to go under, and then we have room for innovation to take hold. So that's pretty much it. So that's my outlook. I can't tell you how many months it's going to go down. If I was to take a guess, I would say September, October, and then start to rebound in November, but that's just an educated guess at this point. So if you like my videos, please like, subscribe, leave a comment. Once again, these are for educational purposes only, and thank you for watching Mike's Investing.